Hey everyone. Ever feel like you're missing out on that whole Bitcoin thing?
Yeah, it can seem a bit intimidating.
Totally intimidating. Well, today's deep dive is all about Bitcoin ETFs.
Yeah.
Potentially your shortcut to joining the crypto party.
It's a fascinating bridge between, you know, that traditional investing world and the wild world of cryptocurrency.
Right.
So if you've been curious about Bitcoin, but you're hesitant to actually buy and store it yourself,
Yeah,
this one's for you.
definitely.
What's really intriguing about Bitcoin ETFs
Yeah.
is they let you tap into the potential of Bitcoin without, needing to become a crypto whiz overnight.
Right, like I could barely keep track of my regular passwords,
Right.
let alone a digital wallet and all that.
Exactly.
So imagine this, instead of dealing with the whole technical side of buying and storing Bitcoin directly,
Right.
you can invest in it through an ETF.
Yeah.
On a regular stock exchange. Just like buying shares of, say, Apple or Tesla.
Exactly. It simplifies the process immensely. You buy the ETF through your usual brokerage account. No need to set up anything special.
Okay, but before we get ahead of ourselves, let's break down what a Bitcoin ETF actually is.
Okay.
So,
Well, it all starts with the concept of an ETF, or exchange-traded fund. Think of it like a variety pack of your favorite snacks.
okay.
You get a taste of different flavors all bundled together in one convenient package.
Yeah.
An ETF is similar. It's a basket of assets you can buy and sell on a stock exchange, just like a regular stock.
So a Bitcoin ETF is basically that same variety pack, but instead of chips and pretzels,
Yeah.
it's filled with assets related to Bitcoin.
Exactly. Now, there are a few different flavors of Bitcoin ETFs out there.
Flavors, I like that.
Yeah.
So what are we talking about here?
One type is a Bitcoin futures ETF.
Okay.
These track the price of Bitcoin futures contracts.
Okay.
Think of it as betting on where you think the price of Bitcoin will be in the future.
So you're not actually buying Bitcoin itself,
Right.
but rather something that reflects its future price.
Precisely. Now, the holy grail for many investors is the Bitcoin spot ETF.
Okay.
These are directly backed by actual Bitcoin held in the ETF's reserves.
Okay.
Think of it like having a claim to a slice of a real Bitcoin pie.
So that's the most direct way to get Bitcoin exposure through an ETF.
Right.
What are the other flavors?
Then we have ETFs related to the Bitcoin industry.
Okay.
These invest in companies that are deeply involved in the crypto ecosystem, like mining companies, exchanges, or even companies developing blockchain technology.
So with these industry-related ETFs, you're not investing directly in Bitcoin.
Right.
You're investing in the companies whose fortunes are tied to it.
Exactly. Imagine you're excited about the potential of electric cars, but you're not sure which car company will come out on top.
Yeah.
Instead of betting on a single car maker, you might invest in an ETF that holds stock in a bunch of them,
Yeah.
covering your bases. It's a similar concept here.
Okay, that makes sense. So we've got our futures flavor, our spot flavor, and our industry flavor. But why would someone choose to invest in any of these Bitcoin ETF flavors in the first place?
Right.
What's the appeal?
Well, for starters, they offer the simplicity we talked about. You bypass all the technical complexities of actually buying, storing, and securing Bitcoin itself. No need to become a crypto whiz overnight.
That's a huge relief.
Yeah.
I mean, have you seen how long those crypto passwords are?
Right?
So you're saying I can basically dip my toes into the Bitcoin pool without having to learn how to swim first.
Precisely. And on top of that, there's the regulatory aspect.
Right.
ETFs operate within the well-established rules and regulations of traditional financial markets,
Okay.
which offers a level of comfort for investors who might be wary of the crypto Wild West.
It's like having that extra layer of security, knowing things are operating within a familiar system.
And then there's the diversification factor.
Okay.
Especially with those industry-related ETFs,
Yeah.
you're spreading your risk across a basket of companies connected to the crypto world,
Yeah.
not putting all your eggs in one basket. Right.
You're essentially betting on the growth of the overall crypto ecosystem, not just on the fate of a single coin.
So even if one particular company in that basket doesn't do well, others might potentially cushioning the blow.
Exactly. And lastly, let's not forget accessibility.
Okay.
You can buy and sell Bitcoin ETFs just like any other stock through your regular brokerage account.
Yeah.
No need to set up anything special or navigate unfamiliar platforms. It's all right there at your fingertips.
Okay. All of that sounds pretty appealing.
Right.
But let's get real for a second.
Yeah.
There have got to be some downsides, right?
Yeah.
What are the risks we need to be aware of when considering Bitcoin ETFs?
You're absolutely right. There's no such thing as a risk-free investment.
Yeah.
And Bitcoin ETFs are no exception. And perhaps the biggest risk is volatility.
Okay.
Bitcoin is infamous for its wild price swings, and that volatility is baked into any Bitcoin ETF, regardless of the type.
Yeah, even I've heard about Bitcoin's roller coaster ride.
Right.
But what are some of the other risks I should be aware of? Well, some ETFs, especially those based on futures contracts,
Okay.
can come with higher fees than if you were to buy Bitcoin directly.
Hmm.
So it's important to factor those expenses into your overall investment strategy.
Fees can definitely eat into your returns if you're not careful.
And there's a potential for what we call performance discrepancies, especially with those futures-based ETFs.
Okay, what does that mean exactly?
They might not perfectly mirror the price movements of Bitcoin itself due to some of the complexities of the futures market.
So even though you're trying to track Bitcoin's price, the ETF's performance might not be exactly the same.
Exactly. It's like trying to follow a winding path through a forest. You're generally headed in the same direction, but there might be some twists and turns along the way.
Okay, I get the analogy. What else should we be cautious about?
Lastly, the regulatory landscape for Bitcoin ETFs, particularly the spot ETFs,
Okay.
is still evolving in many countries.
Yeah.
In some places, they face significant hurdles which can impact their availability and even their future prospects.
So it sounds like there's a lot to consider. But before we dive deeper into those risks and start talking about specific ETFs, let's take a step back for a moment and think about the bigger picture.
You know, it's fascinating to think about where this whole Bitcoin ETF thing could lead us.
Yeah.
What if down the road, Bitcoin ETFs become as common as those traditional stock ETFs you see advertised everywhere?
Yeah.
What could that mean for the future of finance?
That's the million-dollar question, isn't it? It's like, are we on the verge of some major financial shift?
Well, let's play this out.
Okay.
Imagine a world where Bitcoin ETFs are as mainstream as, say, an S&P 500 index fund.
Yeah.
Suddenly investing in Bitcoin is as easy as clicking a few buttons on your phone.
Wow.
That could potentially open the floodgates for a whole new wave of investors.
You're talking about people who might have been interested in Bitcoin before, but were hesitant to dive into the technical side of things.
Exactly. Those who might have felt intimidated by setting up a digital wallet or navigating the intricacies of crypto exchanges. With the familiar and user-friendly world of ETFs, they might be more willing to dip their toes into the Bitcoin pool.
And if all those people suddenly have easy access to Bitcoin,
Right.
wouldn't that likely push the price up?
It's certainly a possibility. Increased demand often leads to higher prices, and that could create a whole new wave of wealth, both for individual investors and institutions.
Wow. That's a pretty exciting thought.
Yeah.
But I guess it's not all sunshine and rainbows, right? There are still those risks we talked about earlier.
Absolutely. Remember the volatility we discussed?
Yeah.
Bitcoin's price swings are infamous for a reason, and no ETF can completely eliminate that inherent risk.
Right. It's like trying to smooth out the bumps on a roller coaster.
Yeah.
You can make the ride a bit more comfortable, but it's still going to be a thrill ride.
And let's not forget the regulatory hurdles, especially for those spot ETFs.
Yeah.
They still haven't been given the green light in the US, which creates some uncertainty for investors.
So it sounds like the future of Bitcoin ETFs is a bit of a mixed bag. It's a lot of potential, but also some cautionary flags.
It's a balancing act for sure, weighing the potential rewards against the inherent risks and making informed decisions based on your own financial goals and comfort level.
That's great advice. Now, are there any other wrinkles with Bitcoin ETFs we haven't touched on yet? Things we should be aware of before diving in?
Let's talk about those fees we mentioned earlier. Futures-based ETFs in particular can have higher expense ratios than their spot ETF counterparts.
You mean those annual fees you pay for the ETF's management and operating costs?
Exactly. And because futures contracts need to be rolled over periodically,
Yeah.
there are some additional costs involved. Those costs, while they may seem small, can add up over time and potentially eat into your returns.
That makes sense. So you're saying it's important to pay attention to those fees, especially if you're planning to invest for the long haul.
Absolutely. Now remember those tricky terms we touched on, contango and backwardation.
Yeah. The ones related to how futures contracts can sometimes deviate from the actual price of Bitcoin.
Exactly. Let's demystify those a bit.
Oh.
Think of it this way.
Right.
Imagine you're trying to buy a concert ticket from a scalper right before a sold-out show.
Okay, I'm picturing a desperate fan waving cash around.
That desperation drives up the price right.
Yeah.
You might end up paying way more than the original ticket price. That's similar to what happens in contango. The futures price is higher than the current spot price of Bitcoin.
So the ETF is essentially paying a premium to buy those futures contracts,
Right.
which can drag down its performance relative to the actual Bitcoin market.
You got it. Now imagine the opposite scenario.
Okay.
You're trying to sell a concert ticket right before the show starts,
Mhm.
but no one seems interested. You might end up selling it for less than you paid.
Yeah.
That's like backwardation. The futures price is lower than the spot price of Bitcoin.
So in theory, that could actually give the ETF a little performance boost.
Potentially, yes. But these situations can shift quickly, and it's really hard to predict which way the market will swing.
It sounds like understanding these dynamics is crucial for anyone considering those futures-based ETFs.
Definitely something to keep in mind.
Now, shifting gears a bit,
Okay.
let's delve deeper into the regulatory landscape for Bitcoin ETFs.
Yeah.
You mentioned earlier that spot ETFs, the ones that hold actual Bitcoin, are facing hurdles in the U.S.
All right.
What's the holdup there?
Well, the SEC, the Securities and Exchange Commission,
Ah,
they're like the referees of the financial markets.
right.
They've been pretty hesitant to approve spot Bitcoin ETFs.
Okay.
They're mainly concerned about market manipulation and investor protection.
They're basically saying, hold on, let's make sure this crypto Wild West is tamed a bit before we let everyone in.
Okay.
They want to see a mature market with safeguards in place.
So they're not necessarily against Bitcoin ETFs in principle.
Right.
They just want to make sure the market is ready. Exactly. They're also concerned about custody, how these ETFs would securely store the vast amounts of Bitcoin they'd be holding. Remember, if an ETF is holding billions of dollars worth of Bitcoin, it becomes a prime target for hackers.
That makes sense. Bitcoin security is paramount, especially when we're talking about such large sums. But even with these concerns, it doesn't mean spot Bitcoin ETFs will never happen, right?
You're right. The regulatory landscape is constantly evolving, and it's entirely possible we could see the SEC change its stance down the road, especially as the crypto market continues to mature and gain legitimacy.
And as more institutional investors,
Yeah.
those big players like pension funds and hedge funds start showing interest in Bitcoin, wouldn't that put pressure on regulators to provide clearer guidelines for ETFs?
It certainly could. As more money flows into the crypto space, regulators will likely feel the pressure to adapt and catch up.
It's like a game of cat and mouse, isn't it?
Yeah.
The innovators are pushing the boundaries, and the regulators are trying to keep up while also protecting investors.
That's a great way to put it. Now, beyond these regulatory hurdles, there's another exciting aspect to Bitcoin ETFs,
Okay.
the potential for innovation.
Okay, I'm all ears. What kind of innovations are we talking about here?
Well, so far we've talked about the basic types of Bitcoin ETFs,
Yeah.
those futures-based spot and industry-related ones.
Right.
But remember that variety pack analogy?
Yeah.
We could see a whole new world of flavors emerge.
Give me some examples. What other kinds of Bitcoin ETF flavors could we see in the future?
Well, for starters, we could see the emergence of actively managed Bitcoin ETFs.
You mean where a fund manager makes strategic decisions about which assets to hold?
Right?
Kind of like a captain steering the ship.
Exactly. That could potentially offer higher returns than those passively managed ETFs that just track a specific index.
And I guess it also comes with higher fees, right? And the risk that the manager's bets might not always pay off.
There's always a trade-off.
Right.
We could also see the rise of more specialized Bitcoin ETFs that cater to specific niches within the crypto market.
Okay, so like what?
Well, imagine an ETF that focuses specifically on Bitcoin mining companies, giving you concentrated exposure to that specific part of the ecosystem. Or one that tracks the performance of Bitcoin held in those decentralized finance protocols you might have heard about. Those are like the building blocks of a new decentralized financial system.
Wow, that's getting pretty specific. But I guess it makes sense. As the crypto market expands and matures, we're going to see more specialized investment products emerge, catering to different risk appetites and investment strategies.
Precisely. And it underscores the fact that Bitcoin ETFs are not a one-size-fits-all solution.
It's about finding the right ETF that aligns with your individual goals and risk tolerance, just like choosing the right investment in any other market.
Exactly. And that's why it's so important to do your homework.
Yeah,
Don't just jump into any Bitcoin ETF because you hear it's the next big thing.
right.
Take the time to understand the specific risks and potential rewards of each one. Look under the hood, so to speak, and make sure you're comfortable with what you see before you invest.
That's great advice. So we've covered a lot of ground here. The potential for mainstream adoption, those tricky futures market dynamics, regulatory landscape, and even a glimpse into the future of Bitcoin ETF innovation. What else should we be thinking about as we navigate this ever-evolving landscape?
It's crucial to remember that Bitcoin ETFs are still a relatively new phenomenon.
Yeah.
They've only been around for a few years,
Right.
which means there's still a lot we don't know about how they'll perform over the long term.
It's like we're all still figuring this out together,
Right.
both the investors and the regulators.
That's right. And that's why it's crucial to approach Bitcoin ETFs with a healthy dose of caution.
Don't put all your eggs in one basket, spread the risk around, and never invest more than you can afford to lose.
Exactly. Solid advice for any investment, really. Now, before we move on to the broader implications of Bitcoin ETFs for the future of finance,
Okay.
let's tackle one question that I know a lot of people have.
Okay, lay it on me.
Are Bitcoin ETFs ultimately a better investment than buying Bitcoin directly?
That's a good one. It's like the age-old question, is it better to build your own furniture or buy it pre-assembled?
Exactly. And just like with furniture, there's no single right answer.
Yeah.
It depends on your individual circumstances and what you're looking for.
Okay, so break it down for me. When might an ETF be the better choice? And when might buying Bitcoin directly make more sense?
If you prioritize simplicity, convenience, and the regulatory oversight of traditional financial markets, then a Bitcoin ETF might be the perfect fit. It's like opting for that pre-assembled bookcase. It might cost a bit more, but you save yourself the hassle and potential frustration of putting it together yourself.
So ETFs are a great option for those who value ease of use and peace of mind. What about those who might prefer to go the DIY route with their Bitcoin?
If you're more tech-savvy, comfortable with taking on a bit more risk, and want to avoid those ETF fees, then buying Bitcoin directly through a crypto exchange might be more your style. It's like choosing to build that bookcase yourself. It might require more effort and expertise, but you have more control over the process and potentially save some money.
It sounds like choosing between an ETF and buying Bitcoin directly is a lot like choosing your own adventure.
In a way, yes. But regardless of which path you choose, always remember the golden rule of investing. Do your research, understand the risks involved, and make informed decisions based on your own personal circumstances.
Great advice. Well, we've covered a lot of ground in this segment, but there's one more piece of the Bitcoin ETF puzzle we need to explore. Okay, so we've talked about what Bitcoin ETFs are, the different, flavors, pros and cons, and even pondered what might happen if they hit the mainstream.
Right.
But now it's time to get really big picture.
Right.
What could Bitcoin ETFs mean for the future of finance as a whole? Buckle up, because we're heading into uncharted territory.
It's fascinating to consider, isn't it? On a fundamental level, Bitcoin ETFs could be a major stepping stone towards mainstream acceptance of cryptocurrencies.
Okay.
It's like traditional finance finally saying, okay, crypto, you're part of the club now.
So it's more than just an investment. It's like a cultural shift, a signal that crypto is becoming legitimized.
Exactly. And that shift could have ripple effects throughout the entire financial system.
Okay.
For instance, we could see a surge in institutional adoption of Bitcoin.
Okay.
Think pension funds, hedge funds, university endowments, those big players with deep pockets.
So not just the early adopters and tech enthusiasts anymore,
Right.
but the Wall Street giants dipping their toes in.
Precisely. And when those institutions start allocating serious capital to Bitcoin, it can have a cascading effect. More demand, potentially higher prices, and suddenly Bitcoin becomes a more established asset class.
It's like a snowball rolling downhill, picking up more snow as it goes.
Yeah.
But it's not just about Bitcoin itself, right? What about the impact on the financial system as a whole? I mean, could this really shake things up?
That's the really exciting part. Bitcoin ETFs could be a catalyst for a wave of innovation in financial services.
Okay.
We might see an explosion of new and improved crypto-based financial products, things we haven't even imagined yet.
Like more complex ETFs, maybe?
Yeah.
Or entirely new types of investment vehicles that tap into the unique features of blockchain technology.
Exactly. And we could see traditional financial institutions scrambling to integrate cryptocurrencies into their existing offerings. Banks offering crypto accounts, brokerage firms expanding their crypto trading platforms.
Right.
It's about staying competitive in a rapidly evolving landscape.
It's like the old guard realizing they need to adapt or risk being left behind.
Absolutely. And it's not just about products and services.
Okay.
This shift could also drive innovation in the underlying technology itself.
Okay.
As more institutions invest in Bitcoin, there's a greater incentive to develop more robust and scalable blockchain solutions.
So we're talking faster, cheaper, and more secure transactions,
Yeah.
potentially benefiting everyone?
Precisely. And those advancements in blockchain technology could have far-reaching impacts beyond just finance.
Right.
Think supply chain management, healthcare voting systems, you name it.
So it's like Bitcoin ETFs are the first domino potentially setting off a chain reaction that leads to a whole new technological landscape.
That's a great way to visualize it.
Yeah.
But remember, even though the potential benefits are enormous, this transformation won't happen overnight.
Right.
There will be challenges, uncertainties, and possibly even a few missteps along the way.
So we need to temper our enthusiasm with a healthy dose of realism. What are some of the potential downsides we should be aware of?
One concern is the risk of regulatory overreach.
Okay.
As governments grapple with how to regulate this new crypto-powered financial system, there's a chance they could stifle innovation with overly burdensome rules.
It's like trying to fit a square peg into a round hole.
Right.
Sometimes the old rules just don't apply to the new paradigm.
Exactly. Finding that balance between fostering innovation and protecting investors is crucial.
Yeah.
And there's also the risk of increased financial instability.
Okay.
As crypto becomes more intertwined with the traditional financial system, it could potentially introduce new systemic risks.
So the more interconnected these systems become, the greater the potential for a domino effect if one part of the system fails.
That's a valid concern. And let's not forget about cybersecurity.
Right.
As more institutions hold massive amounts of Bitcoin, they become even bigger targets for hackers.
The stakes keep getting higher,
Yeah.
which means the security measures need to keep pace.
Absolutely. So while the potential upside of Bitcoin ETFs is huge, it's important to be mindful of the potential risks as well.
It's like anything else. There are two sides to every coin, even a Bitcoin.
Right.
So as we wrap up this deep dive into the world of Bitcoin ETFs,
Yeah.
what's the most important takeaway for our listeners?
Yeah.
What should they be thinking about as they navigate this complex landscape?
I think the key takeaway is this. Bitcoin ETFs represent a powerful convergence of traditional finance and the innovative world of cryptocurrencies.
Right.
They offer a more accessible and regulated way to invest in Bitcoin, which is potentially opening up the market to a whole new wave of participants.
But at the same time, they're not a silver bullet. They come with their own set of risks and considerations, just like any investment. And the story's far from over.
Exactly. This is an evolving landscape full of potential and uncertainty. It's an exciting time to be following the space, and who knows what innovations and disruptions lie ahead.
Well said. We hope this deep dive has given you a solid foundation for understanding the world of Bitcoin ETFs and their potential impact on the future of finance.
And as always, we encourage you to do your own research, explore different perspectives, and make informed decisions that align with your personal financial goals and risk tolerance.
Remember, the future of finance is being shaped right now, and it's up to all of us to be informed and engaged participants. Thanks for joining us on this journey, and we'll catch you next time on The Deep Dive.